Good afternoon. Welcome to IPVision's webinar session on intellectual property in strategic investments and corporate venture. We will begin the presentation in just a minute. First, I'd like to remind anybody that should you have a question during the presentation, there is a panel on the GoToWebinar sidebar where you can enter your question directly in there, and I will retrieve it and forward it on to one of our hosts. Our hosts will do their best to approach each question, and should any question be missed during the session, we will also do our best to cover each one either at the end of the presentation or by contacting the person directly post the webinar with an answer to the question. I will also be reaching out in the coming week to offer up meeting times for those interested in taking advantage of the half-hour consultation session that's included in the attendance of this webinar session. Now, on to briefly introducing today's presenters. First, we have Alex Butler. Alex is a senior leadership team member at IPVision. He has over 15 years of experience in helping clients in developing and adding to corporate and intellectual property strategies. Alex is joined this afternoon by Dr. Val Levada. Val is a highly experienced consultant and practitioner who has worked with both emerging and large companies to bring technology to market or commercialization. Val also serves as a senior lecturer at the Sloan School of Management at MIT. I will now pass it over to Alex. Alex?
Val and I look forward to what should prove to be an interesting conversation within the broad themes that you've outlined. In thinking about corporate strategic investments and related transaction processes, we will explore how organizations and exactly how they're grappling with the interplay between strategic and financial objectives, short-term versus long-term needs and requirements, and the sort of emerging class of stakeholders or persons that are interested in IP as a potential value driver in different decisions. In today's presentation, both Val and I are going to review the IP diligence best practices that we've seen, some of the common pitfalls that we've certainly experienced or lived through over the years. We'll provide a self-diagnosis tool for you to look at how your organization completes diligence or looks at IP within your transaction processes, and then also leave with a few specific recommendations that you can use and take back into your organizations for future efforts. Val?
Thanks, Alex. And Joe, thank you for including me in this webinar. I'm delighted to work with IP to understand where we're going forward in terms of combining the issue of intellectual property and the process of strategic decisions in a corporate environment, whether it's a large organization or small. And I am not an expert at IP, but I have a lot of experience in the area of working in the strategy and technology, the interface of strategy and technology, both with large companies and emerging companies. And for better or for worse, I've been at it for a very long period of time. Let's call it more than 3 decades. So I've seen a lot of things. And if I look back a little bit in a historic perspective, the issue of IP is not a new one, and how do you integrate it into kind of the fabric of the organization. It's not a new one, but I think it's still one that it's in an infancy on how do we apply it and what do we learn from it. I am quickly reminded of the early 90s when I was working with Bell Labs, and an organization like that one suddenly started looking at their intellectual property portfolios and realizing how little they actually knew about it and how little they actually knew about what competitors were doing around them. And being one of these kind of eye-opening first attempt to get a sense of that. Then in the later 90s, when we were working on areas that had to do with metrics for research and development, there was a whole effort to evaluate IP portfolios in one way or another. Later in the 90s, some of my friends in the technology communities were doing some technology mapping, mostly for developing technology roadmaps. So you see these kinds of attempts, but even 20 years later, you don't see the real practical strategic application of the the role that intellectual property plays. What I see evolving today is some interesting dynamics that I think will make this issue even more important. And those dynamics are large organizations are now sourcing technology increasingly from the outside and developing it less and less internally, which means that they have to make decisions on technology that they haven't been working on for years and so on. They need to understand those very quickly. They also are beginning to have more and more efforts in monetizing intellectual property portfolios which they own. Most of it are things that are peripheral to their main businesses. And from the other perspective is you obviously see a dynamic growth of entrepreneurs and emerging companies and entrepreneurs who also have to understand the technology space. So all in all, looking back, I see today something that seems similar to the late 70s and 80s when BCG made a huge impact on managerial decision-making by being able to amass data and then present it in a way that was able to give the management teams an easier way of focusing on the key questions, not answers, just the key questions that have to be addressed.
I think to expand upon that, as Val indicated, IP has been an issue that's been around for a long time in certain industries. It's been very core, pharmaceutical, for example, or telecom. But that continues to increase, and I think the sort of the current media cycle and the current activities around the IP rights it is introducing some new wrinkles to that conversation. So you can't miss a story almost daily or weekly where IP or patents in terms of damage or risk or a transaction or a patent sale has occurred that is starting to get the attention of senior management or other stakeholders. So they're really not asking about IP per se or patents per se. They're really thinking about bigger questions in terms of what's the value of the portfolio that the company holds? Are they maximizing the returns on their technology development? Are there untapped opportunities with the IP? These can be activist shareholders. They can be investors, the analysts that support those communities, board members who are wondering if the investment that's being made in R&D or in outside equity investments, sort of bringing outside companies in through investment or through an acquisition, are those being shepherded well, and is there risk around the IP, or are there opportunities there? And then senior management's asking questions. So the interesting thing here is that these are all, and sort of we're going to take this in the next few minutes, is that these are all persons that are classically trained in business management, technology management, and financial management. So they understand how to read balance sheets and income statements and think about cash flows and speak with the experts around that. And the experts have means to communicate very complex financial information into these more general communities. In the IP space, we haven't quite achieved that yet. So what we're looking at is how can the IP function and the IP experts find ways to communicate and have these better conversations with senior management. And again, how can senior management better work with their experts to not just do the same thing faster, but actually ask better questions and achieve better outcomes.
So, to follow up what you said, Alex, is that when we have to make decisions, there are these two components of the financial perspective and the strategic perspective. My greater interest is in the strategic perspective, and we will repeat some of these later on in the presentation, but generally what we're looking at from a strategic perspective is that the decision-making, the strategic decision-making, is not a snapshot in time, is a longer-term proposition and a longer-term challenge. It is not being done within a certain function of an organization, but is being done between the functions, so it has to be tied to all the other components, particularly the business goals of the organization, not just the technical goals. And what's interesting to me in terms of what IP Vision is doing today is that I think that based on their technology, they are providing the kind of data in a timely and cost-effective fashion that allows you a couple of things. So what it allows you to is allow you to understand and identify and then address the topics, the strategic topics that should be addressed. Not just is this portfolio, maintained well, and do we understand the technical components, but really competition, the phase development, and so on. But at the same time, not just the questions that should be addressed, it's giving you the mapping that allows you to say, what other questions can I raise? What kind of, for example, are there disruptive innovation hedges within this mapping of this technology where even though we weren't planning to, or we don't have potentially today any capabilities, we ought to think about positioning ourselves in such a way to derive strategic value in the future.
So building upon that point, one of the things we're going to start thinking through here and getting into some very specific items is actually changing the definition or suggesting a change to what IP diligence should mean. So as Val indicated, oftentimes IP diligence relates to clearing title, assuring that all the patents are actually listed on an inventory, to use a more traditional phrase, that maintenance fees are paid, that you understand that employment agreements were signed and things along that line. It's a smaller organization. But given the value of IP within an organization, particularly in early stage or growth stage technology companies, the question is, can a new form of IP diligence or an improved IP diligence process lead to better outcomes and better decisions, as well as eventually leading to greater value over time in terms of financial and strategic returns to the organization? So we're going to turn to a self-diagnosis that we mentioned earlier. So, a fairly straightforward or simple three-stage process of looking at a typical transaction. Again, from a strategic perspective, the question is where and what are you looking to make investments in? So generally, there's some sort of technology or objectives in. You're identifying targets, or they're being presented to you by a banker or some other team. What are the criteria that you're using to make it even worth an additional screen? So stage one. Stage two, you're actually in throes of a negotiation or a deal. And then stage three, you've signed the agreement, and now you're either managing the investment and working with the company through its growth phase, or you've maybe gone through an acquisition. But you have to, this is ongoing responsibility. So the question is, when you think about your organization, when are you doing the IP diligence? How are you doing it, or to what extent? And then, think it again a little bit again. Are you doing this early in the process, in the process, or after the fact? We've seen all three. So I'll give you one recent example, sort of a war story, which I think may resonate. We're working with a large firm looking at a technology investment, investing in a company. It was largely built around the promise or potential of a patent. It's about a $15 million equity investment that they were considering making. So in the diligence process, we looked at potential validity or prior art around the patent, and that was the core asset. That was going to be sort of the base or foundation which the business would be built upon. In that process, we and the outside counsel found some serious validity concerns. So the end client saved a substantial amount of risk, or building a house upon a foundation of sand. What was going to be an investment turned into, actually, instead of a $15 million investment, about a $1.5 million supplier agreement. Still got access to the know-how, still got access to the technology, but avoided making an investment in something that may not have been able to stand up over time. So that's just one example of how changing that diligence process into the quality or of the assets, or the quality of the technology and quality of the IP can be important.
Yeah. So again, kind of reaching back to my experience over the years and seeing what's more standard today in terms of how organization look at the intellectual property that either they're doing due diligence on to acquire or invest in or to spin out or so on, you definitely have seen an increased understanding on the importance and value of intellectual property. There's no question about that. But too often what I've seen from organizations that I've been close to or worked in close association with is that one of the first steps that you do is you get a group to take a look at the intellectual property portfolio that you're examining. And that group is probably a combination of your technical people and your legal people. And they both dig in from their own perspective and take a look at it. And what you basically check, do we understand what this technology patent or application is all about? From a technical perspective, do our technical guys know anything about it? Do they know anything around it? And from a legal perspective, most of the time, actually too often, what we do is that, all right, have all these been filed properly? Have all of these been maintained properly? And are they covering they have good coverage on a global scale or on a local scale? And having done that, then I think what you end up with is with a big pile of papers, one very large pile of papers, very technical papers, and very hard to digest for anybody else, and an assumption that, okay, this is all good, or no, this is something that we ought to really watch out about. And then the decision is being based on the assumption that, yes, we either go or no go, and now we've got to make the business decisions.
Yeah, I think that historical process is, in some cases, based upon just the cost of having to do things manually and the cost of experts and the time that requires and the just the level of sophistication or lack of sophistication of first-generation tools, which were essentially built around databases. The more data we can provide in the database, the more that we can search that data and find information. We can generate these stacks of paper and maybe do some basic trend analysis or basic moving the stacks around to try to understand who owns more or who has more. So if I have 20 patents and Val has 10 patents, odds are Alex is maybe twice as good. Not necessarily the case, as Val would certainly attest. So we moved to the thought that it's not just about data or big data, to use the phrase that people like to use today. It's really about using analytics to extract insights and perspectives on the data. So if you think about how things have evolved, now you can actually have multi-dimensional analysis of a portfolio or of a technology space and think about relative position, relative quality, and within portfolios where different things fall. So it's not that somebody has 100 patents and all 100 patents are valuable. I remember I was speaking on a panel in New York recently with the former head of IP for AT&T, and the rule of thumb that was referenced there was that about 3 to 5% of the entire portfolio for AT&T actually had value to the organization, and the rest was either obsolete technology or technology that there's really no defensive or strategic reason to have the patents. There might be some monetization, but it may just be worthless things that they were maintaining. So to look at smaller, large portfolios of patents and IP, it's really about drilling down to what's the core value that's conveyed here, and thinking about how we can diligence that or raise questions around that. So, in the one simple example here, we have an expert system that we developed with some very sophisticated technologists coming out of MIT, some people at corporate and legal firms around the country that actually evaluates patent claims. So simple approach would be to say if there are a series of firms that we're looking at within the technology space that we're considering investing in or acquiring, we see 3 firms here that have this red bar heading over to the right with a greater than 60% on this. What we're looking at here is just, do they appear to be getting broad claims or narrow claims? Generally speaking, broad patent claims are more desirable than narrow claims. There are a lot of caveats, obviously, and you need to be able to drill down into this, but at first pass, to say, why are these 3 companies outliers to the rest of the field or the rest of the industry and people developing technology. So as you start evaluating that and start matrixing that into the portfolio, you can start getting some very interesting analysis or even start looking at different scenarios. So in one example of how that scenario played through, a very large company that we were working with was looking at doing an acquisition of about a $200 million top-line revenue company out of Europe. Some questions arose around IP, and in looking at the technology space more broadly, we identified a $15 million top-line revenue company, so a fraction of the size, not nearly as attractive from a financial perspective. Publicly listed firm, you're doing an acquisition, $200 million, you can scale it faster, you have the geographic reach, you have the revenues, the cash flow, the profitability, all of the good things that you would typically see in a financial statement. The problem was that the $15 million company had all the fundamental IP locked up. So a $5 or $6 billion company acquires a $200 million company, a lot of cash on the balance sheet, they're a big target. IP, certainly it can be used as risk or to move things around in an industry. So what happened? The $5 billion company bought the $15 million company, got control of the IP, entered this new market and space. Fast forward a little bit, a few quarters, went back to the $200 million company that they were originally considering to be their top acquisition candidate, reopened acquisition conversations. The control premium came way down. Why? Well, they were already in the market, and they also had gained control of the fundamental IP, which put them in a much stronger position. Another example here is just looking at how we can see two companies within the space and how their portfolios may interrelate. So company in the left, the x-axis here is time. So company in the left, was the market leader and had most of the IP, had most of the market share and value within that space. The company in blue, unnamed, started developing a bunch of improvements where they saw the market or the technology going. So as you see patents, the patent window for expiration, 18 to 20 years per statute, the company in red is all of their technology and their patents are becoming less valuable or commoditized on the market, and the IP is expiring and going to the public domain. The company in blue, very smart, to put in a blocking position. So fast visualization, you can get down into the details if you need to. But again, the idea is that you should be able to have these conversations with executives without telling them, well, here are the 50 or 100 patents or 45 patents that we need to read through or that we can read through to understand what's going on. So we mentioned the opportunity here is moving beyond data and into analytics as a way to inform perspective and insights. So it's some interesting studies that have been done over the last few years by Sloan Management Review and the editors there, and IBM and some of the analytics professionals and experts at that organization, where they looked at a range of several thousand executives across leading organizations around the world, and they found a distinct pattern here, where top performers organizationally in terms of value and ability to achieve results, growth results, we're using analytics much more extensively and much more broadly than those that weren't. And then as they see in follow-on studies that gap is actually increasing, because what was happening is that people who were firms that were originally using analytics and the typical supply chain management, inventory management, customer relation management, were starting to move that into product and technology management, financial management, and other disciplines. So we see this shift happening as well in the IP space, where firms that are using analytics to very quickly understand what's happening in terms of investments or acquisitions or transactions are gaining a competitive edge. So in one simple scenario, we're working with a very large company that's being frequently presented with patents and investment opportunities, some acquisition, some licensing, to the tune of 4 or 5 portfolios a day. They're weeks and months behind in that review process. They just don't have the labor or manpower to do that. So they need to be able to accelerate that process from a manual review of the patents to analytics prioritizing and helping them figure out what happens. Because the risk is if they're behind in the process of evaluating an opportunity, and it's something that's actually of interest, they may go elsewhere and they may face a lawsuit from an NPE or some other organization. So in the next few minutes, we're going to get into some of the specifics of how this actually can work.
Yeah, so I'll interject some comments as Alex continues his presentation of IP Vision. And the three areas that I want to kind of focus a little bit on as important to making the right decisions when you use IP information data is, how do you go from big data to actual smart decisions? Two is, how do you think of the long-term evolution of technologies and markets and so on? And then how do you think of the strategy if you take account and look very closely at the value chain of the industry that you're participating in, not just your present position? So the first one being, we're living in the days of big data now. Everything and everybody is saying, okay, big data, big data, big data. But big data is only data, and it's just very large amounts of data. Then when it gets to a point, it actually becomes counterproductive. You are overwhelmed with data because you can access it from all sorts of other nodes. But what do you do with it? And that's, I think, one of the things that has always happened in the IP space, where we've had a lot of data and a lot of complex data, and we found it very hard to sift through it. And I think that the technology that IP Vision brings to bear allows you to lay it out in a variety of ways that then you can take a look at it and understand where the interesting components are, and then try to make the decision based on focusing on the right space. So again, big data is not enough. Analytics is important. And finally, arriving at the right decision is even more important. And then again, repeating what we said earlier, arriving at the right decision means that you've got to bring in all the right people and the right functions of the organization in that decision-making process. Some of those functions actually find this kind of data very hard to comprehend and understand. And when you lay it out as clearly and neatly as IP Vision can do, then you get a lot of other people to be able to buy into the decision-making process and into the right focal points.
Yeah, maybe we'll take a couple questions that have come in online, so maybe we'll take one of those now. One of them was sort of the perspective or the experience that was being shared that investors typically are involved in infringement issues. So what's the risk? And then sort of the strategy for offensive and or defensive infringement and other forms of IP protection. I think it's a great question, and I think Val ask you to speak on that in just a moment. But recently, a week or two ago, I was in New York City on a panel with an investment banker for one of the larger firms, Goldman Sachs. It was an interesting experience because what he shared, what other deal makers, some of them were attorneys from corporate transaction teams or outside counsel, and other investors in the audience were saying, is that 5 years ago, 3 years ago, they almost didn't pay attention to IP. Or if they did, it was really around this question of what's our exposure for litigation. That's changing quite rapidly. You might recall earlier in the presentation there was a brief image of an article speaking to IP in early stage and commercial and investment success, something that actually I and one of my colleagues, Joe Azima, authored a couple of years ago. It was describing work we've done with mezzanine stage investors. So people with over $1 billion in capital that are investing in later stage rounds of VC-backed companies, 5-6 year old companies. 10 years ago, IP was really not a driving factor for them or even part of their decision-making process. Now every investment opportunity that they look at, either that's coming to them or that they are actually proactively going out and seeking in technology areas that they're interested in, IP is one of the top factors that they're looking at. The reason for that is that if you get the article, and we're happy to share it, is that if you look at technology-based companies, VC-backed companies that are described in the article in the study, those that have well-positioned, strong, highly rated IP positions or IP portfolios have an uncanny correlation to successful exit from the venture fund. And this is not just any venture fund. We looked at Kleiner and other top-tier or top quartile funds. So if you were in the top quartile of the portfolio assessment, you were, in many cases, 6 times more likely to have a successful exit. Now, the proxy being you were sold or you had an IPO versus being just put out of business or in distress. That's a pretty good indicator, we think. Certainly from an investment perspective, it's not causation, but we think that it's a great indicator or corollary to good management and good decision making within the organization. So if you think about companies that you're investing in or transacting in, if you're building up a good IP portfolio, when you're cash poor, you got a lot of other pressing things in your mind, those decisions probably are more than just around the IP. Val, you want to comment on that?
Yeah, just quickly, and I'm glad that this question came up, because I really should have mentioned it when I was talking about what you see what we've seen up to today in the kinds of IP due diligence, and definitely infringement is at the top of the list, because everybody's saying, okay, is this clean? Can I, am I running into trouble? And there's differences between, I think, subtle differences between financial investors, particular venture capitalists and so on, and corporate investors. And part of it is kind of the interest in the longevity of the infringement issue. Because from a corporate perspective, you're talking about the long term. You're not just talking of 3 to 7 to 10 years max. So a very important issue. And a lot of times, the person who submitted the question is absolutely correct. Infringement was the big topic, particularly turning to the lawyers of the organization or whoever you use. They basically said, tell us if we're running into any kind of risks here. And if we're not, everything's fine. But it shouldn't. It should just be one of the questions that's being addressed. And that's exactly what I think Alex and I are saying, that in the past we've taken a more tactical approach to understanding intellectual property, and we're arguing that we need to take a much more strategic approach to it in going forward.
Okay. So a couple other questions, and we'll try to get those maybe in context where we're at in the presentation. This next, actually a couple of visualizations, we're going to walk through something that was in the press recently. And there's an example of how IP, this is really not an investment or an acquisition story, but it's one where IP transactions, I think, are very illustrative of sort of how diligence can be done within this context. So Real Networks, you might recall from Real Media, streaming audio, streaming video, has really were at the forefront of that, and they developed a fairly large and well-positioned IP position. So end of last year, 2012, they sold their portfolio with a license back to Intel. So over $100 million in cash plus a license back and some additional considerations being made. Well, if you think about it, not all 100 patents within the Real Media or the Real Networks portfolio have great value. So where you see here on the left-hand side is just one cluster of patents within the portfolio. This is an example, a little bit of how IP Vision works with our clients in terms of, having, advisory services supported by expert systems, algorithms, and visualizations. So this is a patent map showing the portfolio on a time scale. What we've done is we've applied, in this case, just for illustration purposes, how we might take an expert system looking at the patent claims and saying, well, out of this larger portfolio of 100, let's drill down into the technology area that we care about, let's say streaming over wireless networks or mobile networks. Maybe we care about patents that appear to have no prior art issues. And we also are looking at patents that are seminal are highly cited in nature, and that have broad patent claims that are well structured per an expert system review of the laws and the rules in court cases that are out in the world. So we apply these multiple dimensions to a portfolio and then say, here are the 4 or 5 patents that we really want to think about. Well, then if you're thinking about a transaction or investment, you know these patents, so that helps your diligence. It also helps you think about your forecasts. So it's moving from just the box checking or the dotting the I's and crossing the T's of, I understand the portfolio, I understand the technology, it appears to be clean, we have everything, to now I understand what are the nuggets within this for future value. And then we can start forecasting out what's the lasting life here, or what's the potential value. In this case, we're looking at the forecast on the portfolio. As you move forward, you can think about that in terms of valuation. So financially, you might say, we'll use a DCF or discounted cash flow model. Well, that's based upon future forecasts on cash flows and what the growth rate will be in the company over time. So if you can understand your financials on a going forward basis, you're also looking at markets on a going forward basis. Are you diligencing the IP in terms of, does the IP cover that going forward value well or not? Just to give you one other point on that transaction, this is all public data that we're working from here. It's $120 million, quote from Real Networks CEO, talking about unrealized value within Real Networks assets, which means it was underappreciated. So in theory, the stock market and share price should reflect the value of the company and the assets that it controls. The day of the transaction to Intel, January 25, 26, you see an immediate jump in the share price. So clearly the market and the analysts and the financial community were undervaluing that part of the investment and the asset portfolio.
Yeah, so I actually am going to not spend much time on this one because I think that it would be more important to save whatever time we have left for responding to some of the questions that you are posing. I mean, we've mentioned this before, and I think it's very important that when you think about your IP strategy and doing your diligence on the intellectual property, it's very simple. It's not a snapshot of today and tomorrow or not. It's a long-term in terms of how that technology, how that market is going to play. And you got to have that vision from the very beginning. The tendency of a lot of people is to basically say, if we look today, we're fine, and we'll figure it out later on. It's not that you have to understand every single step of the way over the next X number of years, but you do have to have that vision of how this is going to play out over a long period of time.
So move quickly through the next two or three slides because there are a couple other questions. One of the things that sort of builds upon what Val was talking about in terms of technology adoption and being able to think about looking forward in time is thinking about what's the value chain for this industry? So sort of a classical business or executive management technique. Where are we playing as an organization? What are our needs? What are the end uses? So are you developing basic science and basic materials? Are you integrating those into products? Here's an example from the fuel cell industry, something that is ebbed and flowed a little bit over the years, but has seen rapid growth and is poised by many analysts and by many of the automotive firms to be a very key area of focus in the years to come as we move from a petroleum to an electronic or hydrogen-based transportation system in North America and other countries. So if you can think about that, it's also about, does the portfolio, where's the value going to be in the future? So if you're investing in a company for membranes or catalysts, for example, and what they're doing in that space, does their IP portfolio, which may be separated a little bit from the base technology, is it forward-looking into, maybe those membranes and catalysts are going to become a commodity, and the price is going to plummet for cost of materials or other things. So if that happens, financially or strategically, you might be concerned, unless they have an IP strategy and an IP portfolio and path or a commercialization path that's actually looking forward in time to higher value end uses or higher value integrated components.
Yeah, so just a quick addition here. A couple of things. One is I think that we increasingly are seeing that this issue of the value chain is a very fluid issue. And I think that you're seeing increasingly companies coming in and expanding and contracting constantly as they reassess their strategy. So the idea that you have to know not only the central node, but the periphery of your strategic position is absolutely key. And understanding the opportunities and threats just in that small area is not enough. But from a data perspective, it's very difficult. And I think that people have a great difficulty even trying to get a handle on that immediate space, much less the periphery. And as a result, they don't do much. Once again, I think that IP Vision has a capability to facilitate the understanding of the central node as well as the periphery by efficiently dealing with the mapping of the data.
And this is actually speaking about an approach or a process you can start visualizing or thinking about. So this moves the diligence process, the evaluation process, from looking at the specific portfolio, but starting to actually understand the context. So if you think about following this, you can start at the portfolio level of a company or a competitor or a potential investment candidate. You would also look at the technology area. So this could be broadly stroked or narrowly characterized. If I'm looking at it from a technology area, this is important because it's now helping you better understand the context that the company or portfolio you're looking at is within. And that can also very quickly help you understand who the other patent holders are. Are there a lot of fundamental research being done at research institutions such as MIT or Stanford or some of the others in that genre? Is it really dominated by smaller companies, smaller portfolios, or larger organizations, the Fortune 200, Fortune 500 starting to build IP positions? They're generally not the first movers in the space. So as they start entering in and the volumes start growing, you can start saying, well, the dynamics of the IP have changed. It also provides you with a method to start thinking about where there may be risks to the investment. If you start seeing patent holdings in the space or patents of specific interest that are held by firms that may, I won't disparage them too much, but call them non-practicing entities. But there certainly are risks in those. So you can start thinking about this. That was part of the question we were looking at earlier when we were talking about this $200 million acquisition opportunity when the company was looking at entering a new market. Concern was, what's the risk here? And there was risk. There was a $15 million company that was financially struggling that had high value IP. So you bought control of the company, bought control of the IP for that reason. And it sort of very easily could have ended up in the hands of a firm that would have looked at that IP purely as a financial asset. And when that happens, you start seeing the enforcement and licensing programs and modernization programs really picking up speed. And then you're kind of beholden to them because you didn't diligence it or look at that context up front. So so some of the other visualizations you're seeing here. So IP Vision's model. Again, we have this advisory sheet, but we also have an underlying platform where we're bringing in the patent data on actually twice a week basis, manufacturing data on top of that, and that supports our clients and us in terms of their ability to provide reports, self-driven, drill-down analysis of results, and start thinking about, if I go through this technology landscape and I see that a company, let's say I see that GE or UTC or GM or Alstom has a patent portfolio in the space, I can then drill down if I care about that. And it's a way, again, start thinking about new things that you might ask or new questions that might be raised, and iterate out very quickly. I was with a company a couple of weeks ago where they're looking at one of these technology level reviews, looked at a competitor and customer's portfolio and realized there was a joint venture that was probably arising around some materials because there was joint ownership on some IP. Completely shocking to the management team. They weren't aware that that possibility had existed. So again, it's new questions, better processes.
Yeah, so just to finish our comments, the two things that I think you need to remember, one, the transaction has to be a well-executed transaction with the right dimensions to it and so on. But really, at the end of the day, the hard work begins after the transaction, and how do you manage it in such a way that you maximize the value that you derived from that transaction. And I think that what you're seeing today, that particularly a lot of the larger organizations have gotten very good. They can get better, but they've gotten very good at understanding how to put together a good transaction. But ultimately, success or failure will be based on how those transactions get managed over a longer period of time.
Okay, so we promised a process and some recommendations here, so we're going to give those quickly and speak to it. So the first is, understand the IP portfolio. So we're not saying don't do the traditional diligence. That's still rather fundamental. Is the title clean? Are the fees paid? Do you have a full inventory of what's owned or not owned? Then we start thinking you need to start expanding the conversation and making it a meaningful analysis for the deal team or the decision-making team. So, what's the value chain around this technology? You're probably already doing some of that around the market stuff. So now it's just a matter of applying that and thinking about that in an IP context or IP perspective. And it's not just patents, obviously. I think there's a question around that. So you can see, is there a defensive publication strategy, or are there trade secrets? So you have to understand all of the different value drivers and IP drivers. Given who we are and who we work with, patents tend to be core to many of these conversations, but it's certainly not an exclusive possibility. Think about those end uses. What's critical? What really matters or drives value over time? You're not going to look at every potential end use, but what are the ones that are going to add real value to the organization, strategically or financially? Who are the other core players? Are they non-practicing entities? That's a concern. Is it a patent holding firm? Is it a large company? Well, that might actually be an opportunity. Maybe there's a partnership that might develop over time. Is it a competitor, a supplier? You have to think through that process and how that might happen. And then I think to Val's point, and I'll let him expand upon this in closing, is think about how it's not just pre-acquisition or pre-transaction or pre-investment, but what actually happens afterwards.
Yeah, and actually, I think I've said enough about that one. You know exactly what it means to manage that transaction afterwards. You think a lot of times they think that the hard work is done in the due diligence and the deal structure, but the really hard work starts afterwards. So I think we should turn to some of the questions that they've been posed and see if we can provide some initial answers.
All right, Joe, were there any other questions, or you want to remind people how to submit them before we go?
Certainly, yeah. If there's additional questions, you can submit through the question panel on the GoToWebinar screen. There's a couple of questions that I have up here right now. One, Alex, maybe you can just speak to briefly. There's a question regarding the visualizations. You spoke to it somewhat throughout, but how are the visualizations generated, like those maps, and where is the data actually coming from that's within the maps?
Yeah, so there are a couple different sources that we'll use. The primary source that we're pulling in is patent data. So I mentioned that we bring that in on a weekly basis, or our data team does. And then we manufacture or clean data up on top of that. So in one example, we bring in the U.S. assignment registry or title registry for patents, clean that up so that you actually have a better understanding of who owns what and if there are errors or gaps, because it's just a disaster in terms of data quality. The second piece is an online platform that we have. We have some clients that self-drive on that. Most of our clients use it as a way to drill down or iterate out from a report that we've provided on a technology area or on a portfolio or in a diligence report, or that they're looking at in terms of a screen, a way to drill down or look at results from a screen on a company or in a technology space. And then there's, again, the online platform has a range of software capabilities secure in the cloud type stuff where people can run their own analytics or explore ones that we've prepared, such as some of the examples online. Then we have other expert systems that we can manipulate and interlace with that. It's not just patent data. Oftentimes we're looking at supplemental information. So in some cases we're looking at getting into the venture capital and investment banking databases to understand really what's happening within the space. So I think that's an important piece. Again, the issue is not getting access to the data, though. It's really about how you can put it into a structured decision process that you can repeat across multiple opportunities or multiple instances, so that you actually can say, yeah, we're looking at this from a similar framework, and we now understand and have a way to evaluate what our options are. Joe, is there another one?
Yeah, Alex, could you and Val speak a little bit to offensive and defensive strategies for patent trolls? This goes a little bit more back to the infringement side of investment decisions. But
defensive is hard, and offense or defense is hard depending upon your perspective. I guess the biggest piece here is there are a lot of options and a lot of evolution in the space in terms of how people are attempting to address that. Some of that's coming through statutes and regulations. Some of that's happening in court cases, impacting damage awards and standing along that line. You all certainly have defensive aggregators that people can join in with. Some clients will buy patents purely to avoid risk. That's an expensive proposition over time, because once you've bought one, maybe you should buy the second and the third and the 50th and the 100th, and then it becomes something that's noticeable on the Treasury. I personally think the most important thing is awareness, so that you understand what the risks are, understand where the potential may be. Because then, if you're aware of it, at least you can properly frame the conversation internally, so that people don't come back and say, a year later or 2 years later, why weren't you aware that we face this risk? So organizationally or strategically, I think that's the important point to do.
And I think that the question actually is an indication why this whole area is of such great interest and evolving, because you do have a whole set of, again, a very fluid situation. It's hard to figure out how it plays out, how it will play out, and as a result, you really, as Alex said, you really have to know your stuff. You have to understand your present position and your future positioning, attempting a positioning, and you've got to evaluate the opportunities and risks from all dimensions. And it's tough.
Yeah, and I think that's just a matter of point. You can think about it also in terms of what are some of the potential futures. So you can have what you think is going to happen. Oftentimes when you're making financial projections or other market projections, you may have a few alternative scenarios that you're presenting. The best case, worst case. You may also do the same thing in terms of the IP. What happens if this company or something happens to the IP? What happens if the patent or the portfolio that we're investing or held by the company we're investing in is found to have some fatal flaws that we were unaware of, even because of our due diligence? Should we consider that impairment? Should we consider that risk? I'd argue that you should.
Yeah, absolutely.
All right, Joe, anything else? Otherwise, I think we're rapidly approaching the time that we reserved for this on people's calendars.
We are. So there's a couple of questions that have been left unanswered. We will get to those post the presentation. Each person who asked a question that we did not answer will receive an email directly from me, Joe Carana, at IPVision. I'll make sure to consult with the two hosts so that we can answer the question effectively and get back to you within the next couple of days with an answer to those questions. Just a quick reminder, I'll also be reaching out to set up consultative appointments as desired, post the offer for the webinar attendance. We thank you all for attending. Hopefully it's been a rewarding session. You will have access to the webinar on demand on our website, and I will send a link out to that as soon as that is up. And also I will send out a copy of the slides.